What's up, everybody? Mike Drutar, principal broker and owner of Next Home Paradise Realty, your Kona real estate expert here. And this week is Property Tax Assessment Week. All right, everyone's favorite week of the year. I'm going to take a look at what's inside here on your property tax assessment, what it means, what you need to look for, the property tax rates we have here on the Big Island of Hawaii, how it differs depending on your age, how it differs depending on your tax class, whether you live here or not full-time. There's a lot of detail to cover, and this is really important for anyone who's looking at buying here on the Big Island. Your tax rate is going to be very, very different depending on if you live here full-time or not, and there's a number of exemptions that also you may qualify for. So we're going to take a look at that right now. We're going to do this starting off at the big picture, and then we're going to get a little bit more focused as we move on. I'm going to start off by showing you a copy of my property tax assessment for the condo that I live in, show you the important things to look at there. Then we're going to take a look at the different exemptions that may be available to you, how the land classification ties into your property tax bill. And then we're going to look at a couple properties side by side that are the exact same, and we'll show you how different people will have different bills for virtually the same property. So the first thing you're going to look at most likely is the front of the assessment. You have two sheets of paper here, a white one and a yellow one right here on the front. You're looking at some basic information. It's going to have your property ID, that's going to be your parcel ID number. It's going to show you who owns the property. It's also going to show you the exemption amount and what that exemption is. Your land classification, that's your property tax rate essentially. And then it's going to show you your current year assessed valuation alongside of last year. By looking at these two, you can see how much your property has appreciated or depreciated in assessed value. Now the first thing you're probably going to look at is this year's market value, and it's broken up into the improvements and the land. The next column you see is this year's assessed value. Now this is the number that actually calculates your property tax. Now one thing to know is that these numbers aren't necessarily going to be the same every time depending on a number of factors. The third column is going to be your exemption if you have one. And then the final column is this year's taxable value. That is the assessed value minus your exemption. This number is the number that they use to calculate your actual taxes. Now, one of the biggest questions that always comes up when people get this notice in March is, what is my tax bill? And the truth is, no one knows yet. The actual tax rate is not set until May by the county council. So, if you were to be unhappy with your assessed value, you could file an appeal. However, if you wait to get your tax bill to file an appeal, it's too late. If you look on the back of this page on number 8, you'll see that April 9th is the deadline for filing appeals of your assessed value. So if you think your property tax assessment is higher than what your property is really worth on the open market, you could file an appeal. There are very specific guidelines for an appeal though. If you think it's $1,000 high, they're not going to even look at your appeal. The appeal has to claim that your property tax assessment is more than 10% off of market value. So if you're being assessed at $500,000 and you think your property is really worth $475,000, they don't even have to look at your appeal. You'd have to be at $450,000 or less by statute for them to even look at it. Now, I can tell you that often they will still take a look at it if it's not super close, but by law, they don't even have to consider your appeal unless you claim it is more than 10% off of the actual market value. So if you are wanting to calculate your taxes based on last year's tax, you can go to the County of Hawaii Real Property Tax Office. Their website will have the property tax rates on there. Remember, this is for the prior year, and the rate for this year may change in May. Now, when you're looking at these rates, it can be a little bit counterintuitive. Most people are going to look at class number 1, residential, and think that applies to them. But that only applies to you if you do not live on the property. If you're a homeowner who lives on the property 200 days a year or more, most likely you have the option of qualifying in Part 9, the homeowner property tax class. Now, as you can see, there's a big difference in tax rate between the two. So if your home is owner occupied and you have filed for your homeowner exemption, you pay $6.15 per $1,000 of assessed value. If it's not your primary residence, that jumps up to $11.10 per 100,000 of assessed value. And if your property is valued at $2 million or more, each dollar over the $2 million assessment is $13.60 per $1,000 of assessed value. So we have the assessed value and we have what is last year's tax rate. The missing piece we have in here for a lot of folks is the home exemption program. Now again, if you live at the property for 200 calendar days per year, you qualify for the home exemption. The basic home exemption is $40,000 for homeowners under 60 years old. For homeowners 60 to 69 years old, it's $80,000. For homeowners 70 years or older, it's $100,000 exemption. Also, there's an additional exemption of 20% of the assessed value of the property, not to exceed $80,000. So we have, for someone who has the homeowner exemption, we have the basic $40,000 exemption plus the $80,000 exemption for a total exemption of $120,000, which is what we saw on this tax bill. There are also some additional exemptions, people with disabilities, people with Hansen's disease, and you can go to the Real Property Tax website to get more information on that. Finally, one of the other huge advantages is that there is a 3% assessment cap per year. This is going to come in really handy in times like now because we're seeing massive gains to our market. If you're not a homeowner, those big gains can go straight to you year after year. And if your property value goes up 20%, it stands to reason that your property tax could go up 20% too. But if it's your primary residence, it can only go up 3% per year. So let's look at how this plays out with two condos that are identical. We see that these are both 3-bedroom, 3-bath condos, 1,722 square feet, both in the same complex of Kona Sea Ridge, both built the same year. The property on the left is not owner occupied, and the property on the right is owner occupied. So we'll notice with the property on the left, the total tax assessed value for 2020 was $540,000. That was an 8% increase over the previous year, which was a 9% increase over the year before that. When we look at the property on the right, we'll see that the tax assessed value is $464,100. Now, the assessed value is lower because the 3% per year cap on owner occupants is applied not to the taxes themselves, but to the property tax assessed value. So we can see that in the previous 2 years, the property on the left had about $82,000 in increased tax assessed value, while the property on the right only had about $26,000 increase in its tax assessed value. Next, we take a look at the exemptions, and the condo on the left had no exemptions whatsoever, but the condo on the right had the $40,000 exemption plus the $80,000 exemption, giving you a $120,000 exemption. So now we have our tax assessed value minus our exemptions, our net taxable value. The next step is to factor in the tax rate. This can be difficult to find. It's in this little section up here called PIT code. We can see that an apartment or a condo is a PIT code of 2. From there we go back to our Real Property Tax Office Hawaii County tax rate sheet, and we see that apartments, code 2, are $11.70 per $1,000 of assessed value. Now that's for the property on the left. For the property on the right, we see the PIT code is 9. That's homeowner, and that's $6.15 per $1,000 of assessed value. So now we can look at our tax assessed value minus our exemptions multiplied by our tax rate, and we come up with what we have here, which is really different. The non-owner occupant paying the highest tax with no exemptions at full market value is $6,318 a year. The property taxes for the owner-occupied unit with a $120,000 exemption with the 3% cap with the lower tax rate comes out to $2,116.22. So we can see in this case that being a homeowner cuts your taxes down to about a third of what they would be if you were not a homeowner. Again, the term homeowner here means owner-occupant. This can really be important when you're looking at buying a property. You can have two properties side by side that look the exact same. They really are the exact same. And you sometimes will see that they have massive differences in the property tax. And often the question that we get from home buyers is, why are the property taxes so high on this property versus the other? And the answer is that property owner has their own tax situation that puts the tax bill where it is. Property taxes for your property will adjust to your situation. So if you were to buy the property on the right in this example, but you're not going to live on it, it's going to be a rental, you're never going to be here, you're not going to get that property tax rate in the future. It's important to note that we do not reassess at the sale. So if you have a property that's got an assessed value of $540,000, just like the property we have here on the left, and you bought it for $1 million, your tax assessment does not suddenly go to $1 million. Now, that will have an influence on your property taxes next year as they calculate out what the market value is, but it doesn't automatically change to what you bought the property at. So that's probably more than you ever want to know about property taxes here in Hawaii. I hope you found this information helpful. Thanks for watching this video. Be sure to click like, be sure to subscribe. That helps me out a lot, and I'll see you next time.